The market yesterday on April 9th saw one of its best days since World War II. The gods have blessed us with this one, with Trump's new announcement on a 90-day pause on tariffs, except for China, which rose to 125%. No surprise there. He said on Truth Social, "I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately." So the reciprocal tariff is still in full play, but really no worry there. Also said, "I thought people were jumping a bit out of line." Well, when you're imposing these tariffs and the economical fundamentals are starting to decline, investors are definitely going to get worried. He also said, "Biggest day in financial history and a great time to buy." Clearly, the market's going to go up if you are constantly putting these crazy tariffs on countries, something we have not seen in a while. And then randomly put a 90-day pause. Yeah, the market's going to go up. So the S&P 500 rose 9.5%, the best day since 2008. The Nasdaq 100 rose 12%, the biggest gain since 2001. The Dow Jones Industrial Average rose 7.8%. The 10-year Treasury bond yield also rose 4.4%. I talked about this in my previous video, but since December of 2025, the bond yield has been going down. Every time we hit a recession, the bond yield decreases. So any rise is a good sign. People are definitely more confident in the economy right now. But people are trading with the castle in the air philosophy, which more focuses on the crowd in the psychological investment theory. So they're very glued into the news headlines, but the U.S. could still see slower economic growth. The fundamentals have been hit pretty hard, and there's still a huge, large tariff on China, which we import so many goods. One of our biggest importers is China. So the CPI comes out Friday. I talked about this in my previous episode this week. I do think the impact on Friday's CPI report has already been done, so I don't think that's going to come out too positive, and the CPI has been decreasing for the last year. Every time we've hit a recession, the CPI decreases, so that's still a pretty important economic metric to look at for Friday. Now, what should you guys do? The stocks will definitely start to rebound right now with the ease on tariffs. I talked about this. Once Trump stops his tariff plan or just eases off, the market is going to react very kindly to this news, which it did. There's so much volatility in the last couple of weeks and months, and there's so much uncertainty. I said it's like a dense fog. You can't really see through it. There's some truth to that, but then again, right now we know that the market is going to benefit for the next 90 days. That is for certain. Maybe going back to the levels we saw in the beginning of the year. In terms of recession, just need to stay on top of the economic fundamentals. CPI comes out Friday. That's an important one. They've still been hit pretty hard, so like the fundamentals are still not the best. They've still been pushing towards my thesis of a recession. So many analysts are saying that we're still in a recession, and we could very well be. Earnings seasons is in the next couple of weeks, and it may still be rocky. Even with the 90-day pause, these companies still have been hit with tariffs, and I don't think that, especially consumer discretionary, I think they're going to be hit pretty hard with the earnings seasons, but I don't think it's really going to be the best, and this will certainly drive down the market once these big companies report their earnings. So a little valuation, the S&P PE is at 27.99, down 0.78 from last quarter. So in terms of valuation through the P/E, the profit to earnings ratio, I think the market is definitely undervalued. We saw it in the last year reach levels to such high valuation through the profit to earnings ratio. So it's definitely good to see that come down a bit, and I think that was definitely needed. In terms of an average valuation of some of the big companies in some of the major sectors, we're seeing technology be somewhat overvalued. Apple is currently undervalued. Microsoft is overvalued, and Nvidia is overvalued. Apple's not the worst look right now. They are trying to change over their manufacturing into India to kind of combat these tariffs. So definitely a look there. And they have an average PE of 32.97. So looking at the PE, it is definitely still pretty overvalued, but I like a good high PE. it shows that people are still confident in this stock. In all of this, the fair price and the valuation I'm coming up with is all based off the discounted cash flow. So for financial services, Berkshire Hathaway is overvalued, JP Morgan is undervalued, and Visa is overvalued. Love JP Morgan right now. The stock price has come down with just the market volatility we've seen in the past couple of months. I said this in my previous episode, but want to start looking at companies that are necessities rather than wants. And JP Morgan fits that category. Great company, low PE, with the exception of Visa with the 33.49. Berkshire and JP Morgan have a pretty low PE, so definitely like to see that. I think as the market starts to recover, these profit to earning ratios will start to increase. But I love the JP Morgan play, and it is undervalued right now. And they have an average PE. The financial services have an average PE of 17.96. For consumer cyclical, which I have seen hit the hardest with this fear of recession, lower consumer spending, all of that, they're pretty undervalued, which I expected. So Amazon is undervalued. Tesla is overvalued. I do not like the Tesla play. With Elon Musk, all the news with him firing government employees, there's a lot of correlation with the stock price and his company Tesla. So I think there's just too much volatility in that. And Home Depot is undervalued. I don't really like the Home Depot play. I think they're definitely going to be hit pretty hard with the tariffs and lower consumer spending and the fear of recession. The Amazon play I do like. They can kind of navigate through these tariffs. So this consumer cyclicals have a pretty high PE of 64.03, their average PE. I mean, due to Tesla's huge profit to earnings ratio. But if you don't take that into consideration, they have a somewhat average PE as compared to technology. So I really like the Amazon play. Don't like Tesla. I don't like Home Depot. But yeah, they've been hit quite hard. The last one, energy. We've seen these energy stocks go up even through the crisis the market has been seeing. They have an average PE of 13.42 with these three companies. So low PE, and they are all undervalued. I don't really invest too much in energy stocks. I talked about Antero Midstream, which is a oil and gas company in the U.S. That's definitely one you should check out. But yeah, I don't do too much analysis on these companies. But they're all undervalued right now, and they're good plays in the future. Very strong companies. So to conclude, definitely discount average, the Charles Schwab Dividend Equity ETF. I talked about that in my last video. I also have a video on it on my channel. Definitely go check that out. Great ETF. I also like Bowhead Specialty Holdings. Talked about this in previous episodes. Tremendous growth rate. They're undervalued right now, and they have a great balance sheet. So definitely go check them out. The market's very volatile right now, so just be careful. Don't try to jump into stocks too much, because I think this rally may end at some point, certainly after the 90-day pause. But just keep up with the news and stay away from that castle in the air theory. Focus more on fundamentals, because that's the most important part of investing. All right, thank you guys so much for watching. Hit that subscribe button, comment any questions or concerns you have, and have a good day.